Hello investors and future investors, welcome back to the channel. In today's video I will show you my trades for this upcoming week using the best option strategy. I'll also show you the next stock that I'm going to acquire to add to my options portfolio. And if you're just getting started with options, I'll show you one stock that you can buy right now to start practicing your option strategy. So if you're new to the channel, thanks for stopping by. On this channel, we help you with option strategies and other investments that can give you consistent revenue. We can all make weekly revenue if we want to, so I'll definitely show you what I'm doing on my end to generate revenue. Now, all I ask in return for this free content is an early thumbs up by you hitting the like button, and consider subscribing for more ways to increase your investments. Welcome to Investment Gains. Let's jump right into it. Let's start off today's video with the number one rule of option trading, and that is to never enter a trade without having an exit strategy. That being said, let's make some money. You should know by now the best option strategy, in my opinion, is the covered call strategy. And as the video goes along, you're going to come to the same conclusion. Now, my options portfolio is very small and it only consists of 4 stocks that I'm actually using to sell options. Now, these stocks you can see is DraftKings, XFEV, Peloton, NEO. You will become more familiar with these stocks as we go along. So let's get right into it. Our first stock for today we're going to be selling options is going to be XFEV, ticker XPEV. Now, in order for you to do options, you must own 100 or more shares of the underlying stock. So as you can see, I do have more than 100 shares of XPeng. Now, like I said, we're going to be selling covered calls because in my opinion, that is the best option strategy. Now, before we get into that, I want you to pay close attention to the average cost. Now, my average cost is at 9.28. I'm going to come back to that very shortly. Now, let's go ahead and selling. So we're going to go to trade XPEV options. So we could open up the options chain. Now, this current week is expiring today, which is January 13th. So we're going to go to sell and call, and we're going to choose the next week, which is going to be January 20th. Now, my personal strategy is always to sell an option that has a chance of profitability of 80% or higher. Now, with the XPeng, that's going to give me a strike price of 11.5, and with that strike price of 11.5, my chance of profitability is going to be 85%, which is well above my 80% threshold. Now, for selling this option at 11.5 strike price with a 85% chance of profitability, I will be receiving premium right away into my trading account. That premium is going to be 14 cents or $14. As you well know, each option contract is multiplied by 100 shares. So let's go ahead. We're going to click into this one. We're going to go ahead to continue. We're going to choose the amount of contracts we want to sell, which is going to be 1, because we only have 100 shares. We're going to go to review order, and then we're going to proceed to submit our order. Now, as you can see here, I will be receiving a minimum credit of $14. So let's add that to the count. Let's go ahead and hit submit. Now, our second option we're going to be selling today is going to be DraftKings, ticker DKNG. So let's go ahead to DraftKings. Good, so here we are on DraftKings. Now, like I told you before, just pay a very close attention to the average cost once again. Now, with DraftKings, as you can see here, my average cost is 14.64. Now, with your average cost, when selling options, you always want to sell higher than your average cost, and I will show you why in just a second. So once again, we're going to go to trade DraftKings options. We're going to make sure it says sell and call, and we're going to choose our expiration date 1 week out, which is going to give us January 20th. Now, we're going to be looking for that 80% chance of profitability once again, and the 80% chance is going to give me a strike price of 14.5. The 14.5 strike price gives us a chance of profitability of 81%. I'll definitely take that. Now, with the strike price of 14.5 and my chance of profitability above the 80% threshold, I'm going to be paid 0.16 or 16 cents, which is going to equate to $16. Now, just before we go into this trade, I'm going to explain to you why you never want to sell below your average cost. So as you saw, my average cost is 14.64, which is well above my current strike price. I'm going to choose a 14.5. Now, we all know this market has been terrible for the last couple of months. So what I did is I did break my rule and I sold below my average cost. Now, in order for me to counter that and not have a very bad trade, what I did is that I increased my chance of profitability. And for the past couple of weeks, I've been selling covered calls on DraftKings at a 90% chance or higher of profitability. Now, today the market is really good. So the 92% chance of profitability gives us $15. But back a couple of months ago, it was way below the 14.64 average cost. So let's proceed with this trade. So we're gonna go ahead and click into this one, which is the 14.5. We're gonna hit continue. We're gonna add the amount to contract, which is 1 again. We're gonna hit review order. As you can tell, this is clockwork for me because I do this on a weekly basis. Let's hit submit and we should be receiving $16. Now, that $16 is in addition to the already $14 which we just got on XPEV. Now, let's take a pause for a good cause. If you're getting any value from this video and would like to support the channel, please hit the like button. Also, subscribe to get notified once I release a new video every week. You definitely don't want to miss out on generating weekly revenue. Now, let's continue making money. Our next stock up is gonna be Peloton, and that's gonna be ticker PTON. So let's go ahead and open up Peloton. Now we're gonna start off once again with the average cost. The average cost here is 8.3. So any chance of profitability I'm looking for that's higher than 80% must also be above my average cost, which is 8.3, and that should be very easy to get with Peloton. So let's go ahead and trade Peloton options. We're gonna make sure, once again, always make sure it says sell and call, and the reason you want to do this is because you're selling covered calls. We're gonna choose the expiration date 1 week out, which is gonna give us January 20th. Now we're gonna proceed to look for our chance of profitability. And that chance of profitability, which I particularly like, is always above the 80% threshold. Now with the 80% threshold chance of profitability, that's going to give me the strike price of 12.5. So the 12.5 is going to give me a chance of profitability of 85%, which I'll definitely take. And for selling this call, I will be receiving 0.14 or 14 cents. We're going to go ahead, we're going to hit continue. We're going to choose the amount of contract, which is 1. Now I keep choosing only one contract because I only have 100 shares. If you do have 200 shares in any one stock, you could sell 2 contracts and multiples of hundreds thereabout. So let's go ahead to review. We're going to hit submit, and then we're going to have an additional $14 that's going to be added to our portfolio. Let's go ahead, hit submit. Now our next stock we're going to be selling a covered call on is going to be NEO, ticker NIO. Let's go ahead and open up NEO. And once again, let's start off with our average cost. Now the average cost is going to be 9.86. So any price above this is going to be good. Let's go ahead to trade NEO options. Once again, let's make sure it says sell and call. And then choose our strike date of January 20th. Let's go down and look for our chance of profitability of 80% or higher. And that's going to give us the $13 strike price. The $13 strike price is well above our average cost, so we're definitely going to take that. With the $13 strike price, the chance of profitability is going to be 84%, and that's going to be paying us 0.15 for selling this call. So let's go ahead and sell this call. We're going to go ahead, hit continue. We're going to sell the amount of contracts we want, which is 1. We're going to hit review, and once again, we're going to have an additional $15 added to our portfolio right away once we hit submit. So let's go ahead and hit submit. Now the total thus far should be around $59. Let me do a quick recap. So for the Peloton we receive $14, for the NEO we receive $15, for the XPEV we receive $14, and for the DraftKings we receive $16, which gives us a grand total of $59. Now, how would you like to make $59 very easily in less than 5 minutes, just sitting in the comfort of your own room? Now, as I promised, I'm going to show you the next stock that I will be adding to my options portfolio. Now, the reason I keep saying options portfolio is my portfolio is divided into two: options and dividends. Later on in the year or in the month, I'm going to go through my dividend portfolio and show you how I'm doing. But for now, let's just stick to the options, which is my favorite. So my next stock I'm going to be adding to my options portfolio is going to be Upstart, and that's going to be ticker UPST. So let's go ahead and open up Upstart. Now, as you guys can see here, my average cost is going to be $13.30, and I already have 51 shares. So I will be adding an additional 49 shares to make it 100 shares, and I'm going to proceed to selling covered calls right away. So let's go ahead to trade Upstart options, and I'm going to show you which call I'm going to be selling once I do purchase my additional 49 shares. Let's go to sell and call, and we're going to choose our expiration date once again, 1 week out, which is going to be January 20th. Now we're going to look for a chance of profitability of 80% or higher, and let's go with the $20 strike price. Now with the $20 strike price, I'm going to have a chance of profitability of 83%, which is higher than our required threshold, which is 80%. Now with that $20 strike price and the 83% chance of profitability, we will be paid 0.43 or $43. Let's go ahead. We're going to hit continue. We're going to choose the amount of contract, which is 1. We're going to review our order, and there you have it. So an additional $43 will now be added to my portfolio. That is going to bring my grand total to $102 for 1 week. Now, could you imagine making $100 extra in less than 5 minutes just sitting on your living room couch? Now, as promised, I'm not going to forget the new traders. I have been doing this for a while, but as a new trader, it is a bit confusing. So if I were to be a new trader right now and I wanted to start selling covered calls, I would be going with the ticker MARA, and that's ticker symbol MARA. Now, I do know that I'm biased towards this stock because I do mention it in most of my videos and have made lots of money using MARA, and I've also lost lots of money using MARA. So it's definitely the volatility for me. The reason I really like this stock is because it's very volatile, it's very inexpensive right now, and currently trading at $6.77 per share. So buying 100 shares would be a lot less than $1,000. That's for those of you that are new traders and also have a very small options account. Now, I think MARA is going to be a good learning stock, and if you can sell consistent covered calls on MARA without getting assigned with its insane volatility, then all else will be child's play. Let's do an example together. Now, if I did have MARA in my portfolio right now, this is the exact trade I would be doing. So let's go to trade MARA options. We're going to go to sell and call. And once again, we're going to choose our expiration date, January 20th. So we're going to look for our chance of profitability of 80% or higher. And that's going to give us, let's go with the 88% chance. And that's going to give us a strike price of 9.5. Now, the reason I went way up to a chance of profitability of 88% is, like I said twice before, MARA is a very volatile stock. So you have to be very careful when trading this stock. So with the strike price of 9.5, my chance of profitability is going to be 88.5%, which I'm very well okay with. And that's going to be paying us 0.20 or 20 cents. Now, if you divide $20, which is going to be our total premium, let me show you. Let's go to continue. And you can see here, the minimum credit is going to be $20. If you divide $20 by the price you bought MARA for, which is probably going to be $677, that's going to give you your average rate of return. The average rate of return on MARA usually is always 3% or higher. And that's why this stock is very, very good as a learning stock. Now, if you don't want to stick to my strategy and you want to do your own strategy, here's something else you could do in order to grow your portfolio very quickly. What you can do is reduce your chance of profitability. Instead of going with the 88% chance of profitability, you could probably go down to the 78% chance of profitability. That now is going to give you a strike price of $8, which is way closer to the share price. However, you will be receiving 0.4, which is twice the amount of premium that I will be getting at the 88% chance. This is a very sure way to grow your portfolio very quickly, exponentially. The risk of this is that there is an opportunity for you to get assigned, and then now you have to do another strategy, and that new strategy is going to be selling puts on Mara. Both strategies is going to work. It's going to give you consistent revenue, and then you just keep building your portfolio right after that. Now, we have lots of option strategies on this channel, so if you want to join the weekly income team, like and subscribe right now. Also, hit the notification bell right now to get an alert whenever I post a video. But most importantly, please share this video with someone you think can benefit from its content. Let's help as many as we can. Remember, a salary will give you a living, but your investment gains will give you a lifestyle.